So, bit more than the market makers expected move today. We pushed up another 40 points after pulling back to it and gaining a little stability around 59.18 in the middle of the day. I think pricing for tomorrow for retail sales is still quite high. Looks like we're well positioned to move up into like gamma neutral, delta neutral tomorrow. But the rejection at 6,000 ES into the end of the day is probably not the most bullish thing. If we see this drift down below like 59.80 overnight, that's going to be pretty bad. Dollar moved back up and then down again today. It had gone positive at one point, but ended the day down. Yields down quite hard across the board, especially the 5 and 10 year with slightly lower core inflation numbers. Commodities still marching upwards, so it doesn't appear that a lot's changing there. Manufacturing, metals, and precious metals both moving up. Gold moving up with the drop in the dollar, and oil up 3.87% today, despite supposed Israel-Hamas ceasefires. Core 1 and 3 month ground down today, but didn't break through to like any like really significant new levels. It does look like we're pretty well set up for correlation to keep moving down over the next couple of days. But retail sales could very quickly upend that tomorrow morning. Carry trade leverage fell off a bit with a rise in yen against the dollar. Forward yield on volatility moved very steeply negative from yesterday's positive close to negative 6.63%. So we are seeing a big drop in volatility. VIX down almost 14% today. Leverage on the short end of the carry also fell off, not quite as much, but overall, I mean, leverage on the carry is still very close to all-time highs. We should see more of that fall off into next week, but pulling that leverage back will also mean pulling puts back and could drive volatility back up again. Bond vol still over 100. It did drop a little, but probably picked back up. Well, it was kind of flat yesterday. We'll probably pick back up again today. Not correlated with the move down in 3 month correlation. We'll probably see 3 month correlation catch back up to bond vol if bonds continue to fall. Skew pulled back a little bit today, but it didn't seem to matter. So yesterday it looks like some of the short put position got shaken out, but I'm sure that's moved back up very sharply today. 43.93% of the S&P above its 20-day moving average. That breadth still coming in. Dow and Russell still performing really well, but NQ and ES caught up after today's price action. Correlation between VIX and cash VIX is still quite high. It rose another 5% today. There's still a lot of stress on the short vol trade here. And if any news disrupts it, it's going to be in an extremely risky position, especially with gamma and delta still being negative on the SPX. We can see correlation sync up really quick and possibly see a big move up in correlation, which would be a very big spike in VIX. Fed fund futures not really moving much. Not surprisingly, most of the Fed speakers were still pretty hawkish about continued rate cuts. And we're still pricing in less than one rate cut for June of 2025. This did pull back a little bit. I think it was above 40 yesterday. Today it's at 38.3. So a little bit of a pullback in the bear steepener, but not much of one. So I mean, the inflation data still wasn't cool. It was definitely mixed. On the technical side, we moved up. We tested the 50 MA, but we failed to break above it into today's close. The rejection on the 50 MA could continue out into tomorrow, and a rejection that then failed the 30 MA again would be pretty bearish and probably mark the start of another leg to the downside. So be cautious of this still turning into a bear rally. We haven't really broken up above any levels where I would say that we have a bull signal just yet. Ideally getting back above gamma neutral out here on the SPX chain, so around like 6018, 6020. That's where I'd kind of expect us to get be in a much more stable spot and things to get more bullish. Fubo had a little bounce today, but it looks like it failed to break out of its consolidation. Might continue down from the rejection to like 350. Didn't really test 350 last time, but it might on the second go around. It's definitely still being shorted. Some of the some of the liquidities may be unwinding a little bit, but we'll have to see if it gets a bounce here again at 4 at the higher low, and then if it does get a continuation from here up above like 450, things could get a little bit more bullish on it again. But right now, I would say, yeah, it doesn't look too hot. Above 450, sure. Can we gap up to the all-time high overnight? I don't think retail sales is going to have that much of an effect. And it's expected to fall anyway. It's just if it falls a lot more steeply than is currently expected. 6,500, here we come. No, we got a long way to go before that. But, maybe 60-20. Anyway, I think that's about it for the day. Thank you guys so much for tuning in. I'll see you bright and early tomorrow. Later.